on YouTube Live. I'll start teaching at exactly 9:30. Let's send this out to a few people so we can let them know. Quentin, do you mind sending it out and then copying me so I can then send it out on my platforms on my phone as well?
What's that? What am I sending out?
Send out the link to We Are Live on YouTube.
Yes.
All right, cool.
Give me just a second here.
Cool. Thank you so much, sir.
Uh-huh.
Again, we are on the H24 contract. H24 contract. Ladies and gentlemen, I'm going to go ahead and start teaching in the first 5 minutes here. So let's talk about where we are in the markets. Right now, we're still in that cluster area, but we're working on price being inside today, meaning that price has not broken yesterday's high nor yesterday's low. So we're inside right now. Let me click to roll over to the new contract here just to be sure.
And it's support at theprofitstalker.com.
That is correct.
Okay, I just tagged you in the post that I made on Facebook.
All right, cool. And I got the circle of. So yeah, so it's an inside day on the daily, ladies and gentlemen. So we're just waiting to see if it's going to break these highs. We're just waiting to see if it's going to break these highs here of the previous of Friday. If it does not break the highs, then again, we're working on the inside day. So we got to be very careful about that. And we're looking for price to get above 16, the 333, 16,329 area. So we are rocking and rolling, and we're gonna see what it does. Again, we don't trade. We don't trade the first 5 minutes. We give it a time to settle out. That's when I do my good morning. Good morning, Keith.
Good morning.
Good morning, Quentin.
Good morning.
And good morning, Ron.
Good morning.
So we are here this morning, and right now we're in a cluster, so I don't have a bias. And in addition to us being in a cluster, we also have a situation where it's an inside day today. So we're not going to force anything. What we're going to do is allow the market to come to us uh, and tell us what we should do based on what it's been doing. And if you just look straight across, prices hit this area a lot, like every day, for the most part. So we're going to wait and see how that kind of transpires. And then we'll get to our daily trade and see what we can find. That being said, we are off and ready to get started. Now, $33. As we look at our multiple time frames, we're using the 8100 volume on the far left, 2700 next to it, the 900 next to it, and the 300 to the right, right? So it looks like price is trying to get above the previous day's highs, which it just did. So now we definitely have a bias to the upside. And we just wait for our opportunities. Now we just sit back and wait on the market to come to us. We don't chase it. We wait for it to come. And then that's when we take advantage. So, gentlemen, any questions, comments for me right now?
No.
I think I need an update on that ABC reversal.
When you say update, you like need a refresher?
Refresher, yeah. But I was looking. See,
spread it out.
If I'm not mistaken, I was looking to get into this trade. It had a strong push up. I want to say I was gonna get in around this area, and
you're just gonna get in around this area. You said this area, so about 932. So I see.
Yeah, and I'm looking. I think that was kind of where I got in. It started working. It took a minute, and you see now it's going back down, but it started working. I have to kind of.
Yeah, there you go. So Ron has asked me to kind of go over the ABC pattern again. I will do that so that everybody can see exactly what the ABC pattern looks like. Let me go ahead and I'm gonna hide all my studies for a second. We got a couple of seconds before we get a trade. So let's 1 second here while I pull over here. So ABC pattern, I'm looking for it over here, right? ABC pattern is like this, right? Where you see the market is making higher highs and higher lows, and then it comes and gives you this is A, this is B, and this is C right here, and then it continues to go up. So that's what an ABC pattern looks like, right? So let me draw this for you so you can see. And that way you will kind of know. You have what you have is here is an A pattern, right? I'm sorry, it's the A pattern is here. I apologize. And then you have a B pattern. And then you have a C, right? And let me get this out of the way so that it's not confusing. So this is what you call an ABC pattern, and then the market continues up. And if you notice, once that pattern happens, market just continues to go up, right? That's what an ABC pattern is. It literally is, it looks like a downtrend, but all it is a correction from the overall uptrend, which is here, right? And then as you can see, she continued up. So I like to draw the line so you can kind of see the ABC pattern goes like this, right? after having an uptrend like so. So this is what you call an uptrend ABC pattern. So if you just basically connect those dots, you see the uptrend. And then you see this move to the downside here. And then she turns back up and goes up, right? So that's that there. That's a great question, man. That's a great question. So as we sit here now, what we need to do is we missed that trade, and that's all right because we were talking, but let me get here. Do this here. And then let me get I'm getting all of the stuff that's not necessary for me to take a trade on the 300 out of here. So like right here is a trade. We missed it, but it's okay because it's in a value area right here. But that was a nice one. And everything lined up here. You can see it's green, green. Green, green here. Pullback. Entries right there at 30. She gets to 42. So we'll wait. We'll wait. That's the only one we've had. That's the one we had at 937. That was the only trade that I see we had after everything turned up. All right. So we'll get plenty of more of those today, and we'll take them. We will take them. All right. Hey guys, what y'all got? You got anything over there? Y'all have any?
No,
Hey,
not at the moment. You had a trade would have just happened. No, it's not. It's flickering. So, never mind. Well,
Yeah,
no.
see,
If you get this, you got a poke bar forming now, but it's the second, probably the second move. It looks like. So,
has Ronald gone over the news yet?
yeah, he went over the news, and I apologize. Do you mind going over the news for everybody today?
We got all right, we have an orange folder at 101. It's a 10 wide bond option, and that's it.
And that's it. Okay, cool.
no, yeah. Yeah, so
I see that, Keith. I see
there's
it. So,
nothing to really do because it's coming off that he had to move on to 900. The one you were talking about at 937.
yeah,
Well,
but it worked though.
mm-hmm.
It definitely worked. Okay, so we wait. I mean, let it settle out here. Golly.
Yeah, that would have been a good one.
And see, the thing is, now it's time for you to start learning price action because the arrows are going to always get you in later. It's going to get you in later 100% than if you actually know how to trade, right? The indicators are there because you're going to get in here at 38 versus here at 45. So I'm 7 points to the good. So if it goes in your favor, it's definitely going in my favor. I'm down here. That's called let's talk about this, Keith. Let's talk about this for the crowd here. Everybody remembers, well, Keith, you remember we've been doing this for a long time, but you remember the green bar break, red bar,
yes.
red bar break. And that's where you actually do well at is the green bar break, red bar break, because you get in much, much sooner on your trades. Ooh, that thing's going to go up. That call there was pretty tight. That call there was pretty tight. So we just wait because it broke out. It broke out after the market opened. It broke out after the market opened. So what I am doing now is I am sharing. You know, if you guys know anybody that wants to get on, please feel free to let them know. Please feel free to let them know. Get on, please. Feel free. Uh-oh. So now we just wait, right? We just wait. Wait on your opportunities.
Arrow prints up. That would price it's probably gonna go up, but it wouldn't be a good price to get in there.
No, because you missed all the other move
Yeah.
that went to the upside. So now you got to wait for a downside. Wait for it to try to go down. And once it tries to go down, then we'll try to get the trade again. So you got to wait for it. So, ladies and gentlemen, that is what we do. We wait on our opportunities and we allow them to come to us, right? We allow them to come to us. If it breaks this low, I'm telling you now, it's going down. If price gets below 33, 34.75, the price gets below 34.75, she's going to go down. If she doesn't get below 34.75, she has more upside in her.
Got a question for you.
Yes, sir.
Have we already rolled over our volume symbol?
Yes, we are on the H24 contract now. We are on the H24 contract. And for those who are just tuning in, we trade the NASDAQ E-mini futures. And that's located on the Chicago Mercantile Exchange, governed by the National Futures Association and the Chicago Board of Trade. So it's a highly volatile market. So you can make a lot of money, but if you don't know what you're doing, you can lose a lot of money. And with that thing is just gangbusters to the upside, huh? That's tough. That is tough. But see, I'm telling you, this right here is your saving grace because you see how this bar here is red, and then this bar here is green and it's higher. If it breaks this high, 9 times out of 10, this thing is going to continue up. And that's what I'm going to try to get you to start understanding now so that you don't have to wait. You get in over here. There's nothing wrong with it because it's confirmed, right? But I know for a fact with price is getting in. I'm getting in over here, which means that I'm getting in at a better price than you. The better price you get in, the better off you are, right? Because you don't have to risk as much.
The less risk.
The less risk, right? The less risk you have. So once you know for a fact something is doing something, then that's when you act. And gents,
I was
go ahead.
I was looking at it based off of when it's the second poke bar.
You have a pop already?
Yeah.
Oh wow, I didn't see.
That's when I was looking at the momentum here and the trend here, and then I saw that second poke bar, and I was like, okay, it's probably gonna keep going up.
Yeah. I didn't, man, you should, that double screen now is messing me up. The fact that we got these two screens right here is messing me up. Oh my God, ladies and gentlemen, we are moving up in an expedient fashion here. So let me also change some settings on my charts so that we can get the full picture. Give me 1 second here. 365. And I'll let you see what I'm doing here. Trying to get all of that's correct. Data limiting. Okay, so we're good. We just rolled over the symbol today. So now we're just waiting on a pullback on our at least our 2,700, right? We're gonna pull back on at least our 2,700 here. But you see it, right? It's the same thing over and over again. Now I'm going to teach you how to get into the price a little bit better so that we can capitalize on price a little bit better. Come on. Seems like an eternity, ladies and gentlemen. It seems like an eternity to me.
I mean, well, really, it just that move happened right as the market opens. So we just got to, now we kind of stuck waiting for a strong pullback so that we can get involved. So just waiting.
Yeah.
And the 900 and the 300.
Say that for me one more time, Keith.
Can you flush the 900 and 300?
Yeah, I apologize. There you go.
And I got to step away for a second.
All right, cool.
I sent you a note about my don'ts just to kind of confirm those.
Okay, cool. Let me check you out. One.
And I can update my charts later.
Yes, that's right on one. Yes, that's right on two. So we are good to go. We are good to go as far as that's concerned. So, all right, ladies and gentlemen, the market has made a higher high and a higher low on the daily. And now we just gotta wait on the opportunity here to participate. 33.25 is the line in the sand right now. If price gets below his price, unless it gets below 33.25, it's not going down. And that's the low of this red bar here on the 8,100, the chart to the left. So if price doesn't get below there, then there is nothing for us to do. We really just need to sit and chill, right? And be patient. Oh, we are live. Can somebody check the YouTube to make sure we are live and everything is smooth there? I shared it to my Facebook. Okay, we should be. Okay, well, we're probably good. Because if I do it, it's going to echo. So that's why. All right.
Yeah,
So we have,
it's good.
all right, cool. And all we're doing now, everything's good on that, on your dome, if I didn't say. if I didn't say queen, but everything is good.
Okay, I'll get with you later on the chart part because I still got the symbol needs rollover. We can do that offline.
Okay, we'll do
I'll
it.
just watch your charts.
All right, so let's see what we got here, ladies and gentlemen. The market is coming to it made that little push right at the time we kind of get into trading. So we just got to wait on our opportunities here. Let me explain something to you in no uncertain terms. This is the patient and aggressive business. Patient to wait on what you want to see, aggressive once you see what you want to see. It is literally as simple as that. Right? I can almost guarantee this thing is going to go up to a degree based on price now, because I want to show you something that's an anomaly. I'm going to teach you this right now. Whenever you see, let me move this out the way. Whenever you see a red bar, right, and you see it try to push down, and then this bar pushes up, you see how this bar, it was down, it was red and it was pushing down, and then it ended up being green on that bar right there. Ladies and gentlemen, I'm looking at the 2700 and teaching next man up, Mr. Ronald Jones, what we have going on here. You have a 99% probability that thing's going to continue to push because, and you see, it's coming down now, but it went from 67 to 79 with a strong push. That happens a lot. It's called a 3-bar reversal, right? And the strongest 3-bar reversals happen if, in fact, this is red here, then this pushes down green, pushes down, then end up closing green. I honestly am under the impression this thing, if it breaks this bottom right here, it's going to go down. Ladies and gentlemen, I'm telling you now, price breaks the 61 area, we're going to start to make a down move.
Can you flush your 903?
Yes, I apologize. Yes.
Perfect. There she goes.
And I know this stuff based on what price does repeatedly, right? And once you know how price moves, it almost becomes a no-brainer, and you just have to wait on what you want to see. That's not our trade because we don't trade counter trend live. And that's just me being honest. We don't trade counter trend live. But we do sit here and we wait on what we want to see. Come on. See, this thing is going to go down. Why? I don't want this trade to go up right here because I have a situation where this trade looks like it's trying to go down. You see that?
Yeah.
So really what I want is this thing to go up here. And if it gives me a signal on this, I'm going to tell you to take this trade here to the downside, but it's going to be based on the 900 and 300. Just keep that in mind. Where's your dome?
Yeah, took it off.
Did I take it off? Oh, crap. I didn't mean to do that, man. Didn't mean to do that. Hold on, ladies and gentlemen. Gotta get something going. Oh, that's right. I know why. I know why I took it off.
My dome is up if you need me. I got both the micro and the MIDI ready.
Okay. All right. So open trading done. Because you had the wrong one up. Match your price to I'm sorry, hit that X. Therefore, it didn't happen the way I wanted it to. God dang it. That's all right. But that's it. It does work. It's going to go up now because you have divergence on the 300. Do you see it? Do you see the divergence on the 300?
The long-term momentum it's trending down, and the candlesticks are trending up. So you got your divergence right there.
Yeah, it's right here.
Okay.
That's why I didn't tell you to take this. That's why I didn't tell you to take that short, because I was like, it's going to be short-lived here. And you see, I just pushed strong back to the upside. So now we wait on everything to align here. Wait on everything to align. We've had alignment right at our time to trade, and that's been it. Now we're just waiting on alignment on the 2700 again. If y'all have any questions, please, 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 let me know. You have any questions, please let me know. That sucks. Come on. Come on. Because what you have potentially happening right here, this thing breaks this high. Remember, I told you if you can anticipate, and then if you see what it looks like, and it actually happens the way you expect it to, then you have a high probability of working. This right here is potentially forming divergence. But right over here, I have a bullish engulfing bar right now. So I got to see how this thing, I got to see how the market reacts to this high. Right? If it's going to crash back in, or she's going to try to continue up here. We do have a bias to the upside. Our bias is to the upside because you have a higher low and a higher high on the daily. That sucks.
And you used to do this with a pen and a piece of paper, a pencil.
Yeah, I showed Ronald how I did it. I showed Ronald how we used to plot the numbers. Yeah, with a pencil and a piece of paper, drawing charts by hand.
Ooh.
But it was much longer time frames too, though. I mean, it wasn't like this, like it is now. The volatility of the market now is ridiculous compared to what it was back when I was doing this art in the Stone Age.
It brings things to the light of day, and that probably contributes to the speed also.
Yes. Is that a poke bar? It is a poke bar, but is it a market structure? This thing's going to go up. It's going to go up. Come on, y'all. Give me a trade. Give me something I can sink my teeth into, please. I'm gonna move these arrows. I'm gonna remove the arrows and everything, gentlemen, because we're gonna be getting in on price action. Give us a better opportunity. The arrows lag in price.
So then I would assume we're going to go back to the green bar, red bar break.
Right out, and then you'll hear me say, hey, get ready. So you pull it up, and then I'll say enter. That is a double bottom. That thing is going to go up. I guarantee it. It's going to go up. But I want you to watch this one first, because I want you to see what I'm talking about. You see that green bar right there on your 300? And you see how price is. You should go one. It might break the low a little bit first. Yes, it broke the low. So we wait. because everything's not aligned. You see, and this is what I'm talking about. This is why I'm not calling these trades, because one's red. Ladies and gentlemen, just as a full disclosure, I'm not calling any of these trades because you don't have alignment. When if you can notice on the 2700, one is red and one's green.
I do.
Huh?
You're talking about
The momentum, yeah. So, and then that's why I haven't really, I almost called one, but it was counter trend. I had to remember I'm not calling any counter trend trades. So it's been 30 minutes in. Let's take a look at the overall look of the market right now. I don't like that look. So let's go to the daily. Because we got to wait for everything. Have you seen a trade align yet? Mm-hmm. All right. So, ladies and gentlemen, let me go to the daily chart. As you can see, we have a higher low and a higher high on the daily. Right. And I'm very curious to see if it's going to break these highs or not. Very, very curious to see if it's going to break these highs or not.
So if it breaks the highs, then what you think it's gonna continue up?
Oh yeah, it's gonna continue up. It's gonna at least get to 16,500. At least.
And what's the high?
The absolute high?
Yeah, what is that one?
Oh, this high right here is 16,414. So because we have this bias to the upside, but I can tell you now that bias to the upside is on low volume. I can tell you that right now, because the markets aren't moving as fluidly as they usually do, which tells me we should just wait and chill. We just wait and chill. Please tell me, you got any questions, comments? Please type them in. Now, here's a guarantee. I guarantee you that if price breaks this high, it's going to go up. 72, top of 56. Stop's too big, so we look for a trade on the small time frame. So now we wait, right? Now we wait. Some kind of pullback. Hopefully it just don't take off on us. Yeah, I told you it was going to take off to the upside. Now we just need our trade to happen. Now you got trend and momentum up.
Is that your daily in front of the 900?
Oh, wow. That's a good call, man. Now all we're doing is just waiting for a pullback on the 900 so we can take this trade. Oh, it's going up. Give us an opportunity to get in here now. Come on. Come on. Give us an opportunity to get in. That's all we're waiting on. We're biased to the upside. Everything's lined up. Now we just wait on the pullback. Have you seen anything that you would have taken?
No, I was kind of looking where this arrow printed to maybe get in a little bit before the end because of this poke bar here, but everything wasn't all the way aligned.
Yes, it's tough sometimes.
Yeah, everything wasn't all the way aligned. So
come on and push down. Give me a shot.
Here we go.
Need this bar to close and it to break the low of this bar. And then we definitely.
We starting today with 2 contracts on the micro or 3?
It'll be 2. It'll be 2 because we
that's poke bar.
100.
Need to go just down a little bit further. Come on and break this low. All right, get ready.
The upside.
Yes. You just do one. Did you do one micro? What is it? Hold on a second.
No.
Hold on, let me get Quinn to give me on this one. Quinn, give me look for my signal.
I'm waiting.
In.
In now, price at
What's your price?
no, it's 0.08.
You said 0.08.
1.08.
Out, because that doesn't sound right. That doesn't sound right. That doesn't sound right.
Yeah, it
You
doesn't.
said,
It does.
huh?
It does not. I'm gonna send you a screenshot of my dome again.
1.08. Yeah, that something happened with that, ladies and gentlemen. I don't know what the. Yeah, send me a screenshot so I can see what you had going on there.
It's the wrong chart.
Yeah, huh?
It's the wrong chart.
Yeah, we got to go to the micro. You entered on the wrong market. You're on the wrong market. Let me see what happened here. Let's troubleshoot here. Do me a favor. Yeah, that thing went up too. Because your entry should have been 79 and it went to 84. So let me see what happened here. No, because because you got to think about it. Look at the prices on the dump because it's 16,374. This says 1.08. I don't know what this is. This is the Euro USD. Hold on a second. Let me see what we have here. That's completely okay. So do me a favor, Quentin. Look on your look at your two domes. They say two different things at the top. One says M6EH24, which is not our market, and the other one says ENQH24. So you have two different markets up.
Okay, let me make the adjustment.
That thing's going to. So it was a small one, but it wasn't in the right one about. So hold on a second. Symbol. And I don't want the ENQ. I want the MENQ. If your eyes see micro, let me see it. I see micro NASDAQ. You right?
Mm-hmm.
That's the E. Oh, micro NQ. Boy, look at your eyes. Yeah, it's
I
the
just sent you a screenshot of the one that I should choose. Just verify, please.
yeah. Hold on 1 second. Let's close that one. We do one thing at a time. Ladies and gentlemen, just give me a second here. What I'm doing is making sure everybody's aligned here. Give me 1 second while I. Yep, that's it. I think.
Yeah.
That's it. So you good to go.
Is
All
that
right.
it?
Well, let's find out what we got here. Hold on. Yes, that's it. That's it. I saw the one on the right was correct. And ladies and gentlemen, as you can see, this thing that I talked about it going up is going up here at 80, 86. The entry price we had is should have been 79, and we might have been out at 84, 85, which would have been $120 a contract. But there was we entered on the wrong market, so we went ahead and just exited at essentially break even to kind of give this thing an opportunity here to move up. So we'll just wait on our next opportunity. That wasn't the best one anyway, because it was real herky-jerky there.
So this isn't a poke bar. This is not a poke bar.
That's a poke bar.
That is a poke bar.
Yes.
Okay.
That is a poke bar. It just let's look at the one that just happened.
Well, I was looking at one, the one we was looking on the 8100 chart. I heard you call it a bullish engulfing bar.
Right. This was this bar here. That's when you have a higher high and a higher, you have a higher high and a lower low, and the bar closes green, closes up. So it's a bullish. If it had a higher high and a higher low and it closed red, it's a bearish engulfing bar. But this right here, it is a poke bar. Right.
So that wouldn't be considered a bearish, because that's what I was thinking. It was a bearish engulfing bar.
And it's a bearish engulfing bar. Watch this. It's both of them. It's a poke bar because it's a 1 bar pullback, and it's a bearish, and it's a bearish engulfing bar. That's pretty good, man. Look at you. I see you buying that. I didn't even tell you about that. That's pretty good, man. That's pretty good. Ladies and gentlemen, we are flattening out here, looking for a nicer trade. So we just wait. We just wait. Yeah, close that dome out completely, Quentin.
It's already closed. I closed it. My apologies.
Oh no, man! Look here. I should have caught that. I saw the other one. The other one was right. So I was like, but I didn't pay attention to those prices. And that's all right. That's all right. That's all right. So we just wait. We were waiting, ladies and gentlemen. I'm trying to look for an opportunity here to see. It's kind of flat right now, though. So we just chill and wait on it. Oh my goodness. And as you can see, she's continuing to go up. It got a higher high and a higher low on the daily. And she's just proven to be resilient to the upside. But it's happening on low volume. Let me explain to you what I mean by that. Right? This is why I'm not gung-ho about this. So this is a daily chart and it's moving up. That is absolute facts. Right? And no doubt about it. But let me show you what the volume looks like so that you can understand why my reason for pause happens here. So we get to our volume chart. If you notice, the volume here says that there are not a lot of buyers in here. Look how low that volume is here. See how low that bar is compared to these bars over here? And you see, if you notice, right, teach you something here. Volume has been going down while price has been going up. That's what you call volume divergence. Back in the old days, right, we didn't use indicators. We use volume and price. Whenever you have volume divergence, you're very, very weary to the upside. That is why it's not moving very high, very fast to the upside, because you have volume divergence.
Volume.
I'm sorry.
Right. And when you say volume, you're talking about the I see it on the chart is indicated at the very bottom, but I'm also looking at the size of that candlestick, the body of that candlestick. When you say low volume or low buyers, is that indicate like the third one to the left of it has a lot more volume on it? Is that correct?
Well, yes and no. It's got a bigger range. It's got a bigger range. Doesn't necessarily mean. See, this is the biggest amount of volume out of these three bars. That's correct, but it's still more volume than the previous day, right? It's a bullish engulfing bar, meaning that the low is lower than the previous day low, and the high is higher than the previous day is high, but the volume is lower. See, the volume is lower. You can see it started on this red bar, then it went lower, and then went lower, and now it's lower here too. So I'm very, very weary of anything to the upside from a let's hold and add to it standpoint. If we're gonna get in and get out and get our money, that's what you need to do. Some days that's the way it is, and that's the way it is today, in my estimation. Now, let me tell you what I think. I think the market's about to make a down move if it doesn't break these highs. If it doesn't break these highs, I think she's coming down, because you also have divergence. These are just tidbits that I kind of show of how I make my decisions. I'm not saying the divergence is going to hold, but right now, if you look at it, price is making a higher high, like so. But my momentum on these trades is waning, like so. So that means that the market should be going down. And if it goes down, then we'll look to take our opportunities to the downside. I can't make any guarantees, but what I can tell you is I'm waiting on that thing to do what it's going to do here. So we'll wait. We'll wait. Any questions for me, ladies and gentlemen? Any questions for me? But that's a good observation on that, Quentin, as far as the daily is concerned, because you would think that if it's bigger, if the candle is bigger, or the difference between the highs and the low is bigger, then you might think that the volume is more. But that's not necessarily the case 100% of the time. Does that make sense?
Yeah, it does. It does. I've always wondered about the body of the candlestick versus the wicks at both ends.
Right. And so the body of a candlestick is real simple. All right. It's the wicks is basically the high and the low, and the body is what it did in between. Right.
Yes.
And I mean, it's simple as that sounds. That's all it is. Right. So now all I'm doing now is waiting on that poke bar on that 2,700, because I think this is going to be a down move. And then what you're going to have is you're going to have momentum, trend, and timing, or momentum, trend, and timing here. So we'll look at it and see.
But wouldn't it still be considered a counter trend trade if the overall markets?
The overall market is up, period. So if you take a short today, you're going to counter trend to the overall market, right? But I think the market is going to go down simply because you have that low volume. And in addition to having that low volume, you also have a situation where prices at a resistance area, right? On your daily chart is at a resistance area. So it's like, come on and give me the poke bar. That sucks. So we are here, here, here. And volume is very, 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 very tight right now as far as the market volatility is not where you want it to be. Kind of a scary thing right now, meaning that it's not moving one way or the other. It's real. You see how flat this is? And let me draw this line. Equilibrium. Yeah, what you know about equilibrium? What you that mean you've been studying some, but you at least listening. So yeah, it's at an equilibrium point. So let's see what that equilibrium point really is. Right there. Because at that point right there, that's where price hit the, like if you look straight across. Ladies and gentlemen, just a tidbit for me to teach you here. If you look straight across, price has hit that point a lot, except for, the last few bars here. It's just hovering around here, right? Hovering around this area. So that's what we call an equilibrium point in the market. And that is going to tip the balance one way or the other. So we're going to wait and see which way she goes. We're going to wait and see which way she goes. Please share with your friends, share with your associates, like and subscribe to the YouTube channel. We're on TikTok and Instagram as well. We try to put out content that is heavily valuable to you, that you can make informed decisions. I'll talk about the Walmart put option that I told everybody I thought they should, that it might go down. And I told them I think it was $154.15. If it got below that point or got to that point, that she would fall. And then on Friday, she closed at $150. So she went down like $4. Had you bought that put option, you would have profited about $2 per contract, which is 100 shares per contract. So that you'd have profited $2 times 200, which is $400 per contract on that particular trade. And you would have paid $2.48 for it. So you paid $2.48 for it, and you would end up making $2. So you'd have made almost 100%. I think it was like 81% that option made. So we want to try to put out if the market is volatile enough, we'll put out an option call of the week that you can capitalize on. And then that is it. That is all I have right now. So, Quinn, you got any questions? Keith, is Keith here? I know he said he was stepping away for a minute.
Looks like he's back.
Okay. All right, cool.
Going down, eating some good food.
Right. Yeah, I took my back. Didn't realize that I was on, my video was on. How y'all doing? I'm following on YouTube too live, so I saw the trade that you tried to take. And I've been listening to what you've been saying. So just wait.
I think Quinn had the euro, huh?
Yeah, the euros.
Yeah, he had the euro up, which is fine. I mean, it's not we basically got out at break even. The trade that I called actually ended up winning because it kind of gave a fake move and then moved all the way back up for that 1-to-1. That
I don't know
1-to-1
what I was thinking about. Was I in Europe or something? I don't know.
Huh?
I don't know what I was thinking about. I think I'm in France or something.
Yeah, man. Your mind is somewhere else, man. That's all right. That's okay. You on vacation. You know what I mean?
I'm gonna get it together. I promise.
I ain't about to worry about it, man.
It's that country oatmeal I made earlier with butter and salt and pepper that people don't do in the north.
Boy, that's hilarious. That's hilarious to me. I get it though. All right, so I'm letting you know now. We get a poke bar. I'm gonna be all about that business. If we get a poke bar, I'm gonna be all about that business. Come on. A poke bar, you ladies and gentlemen, is nothing more than a 1 bar pullback on my 2700 volume chart, which is the second chart from the left. And what a 1 bar pullback means is basically I'm looking for one of these bars here to actually be higher than the previous bar. So I'm hoping that this bar completes in 1700 contracts and then it breaks the high. Don't just fall down on me here. Come on now. But it is red and red. And she's hitting that equilibrium point. So let's see how she bounces or she holds or pushes through, right? Bounce means she's going to take off to the upside from here. Holds means she's just going to be down here. Cut through it means she's going to break down through it and give you a potential opportunity here. So we'll see which one it does as time goes on here over the next few minutes. We've been on for about an hour. We had one trade that was a winner. And we were in the wrong market. We were in the wrong market. So I don't really count that as a trade called. There was several things going on where we had to get that corrected, and now it's done. So I'm trying to stay on to give you a glimpse of a winning trade. I haven't seen another trade to happen since we've been on. I've seen that one, but that's been it.
Was Ronald able to get in on that trade?
He was not, because he also had the wrong one up, or I put the wrong one up on him. He had the wrong NASDAQ up versus the micro. He had the mini up, and I didn't want him to take it on the mini because of the risk that's involved, of course. But come on, it's 2,000 contracts. Just push up a little bit, and then give me my opportunity. Ladies and gentlemen, what we're waiting on is for the market to push to the upside here. That equilibrium point is holding. The equilibrium point is holding. It has not given you a poke bar. Not even a little bit. Come on, like, give me a poke bar. Please give me a poke bar. Come on now. And that's where we live, ladies and gentlemen. We live in a poke bar area. That's what we do. Yes. I got a question from the audience. The email address is support at the Profit Stalker, THE Profit, PROFIT, Stalker, STALKER, all one word, support at theprofitstalker.com. Come on now, you got to give me something. And then IT, stalker, STALKER, all one word. Support at theproperstalker.com. Somebody had the echo going on right there. So let's see what we have.
Poke bar coming up on the 2700.
There you go.
It's
There
a
it
poke bar. But again, you saw what she did with the equilibrium, right? And you notice that you have two bars closing above that purple line on the 900. You see how that on you can see it on yours too, that you don't trade anymore. Because
You're no longer aligned.
Above that 200, you don't, that's not what you want. That you want to stay away from that business. Still haven't given us a trade, ladies and gentlemen. Still has not given us a trade. So he's gave us that one trade that we had some technical difficulties on, but you know, it didn't hurt us. So we have to wait here. Let's see here. 75. Ooh, that's a big stop. That's a big stop, buddy. The market's been flat today. Hasn't really given us anything except that one move right at the open. It hasn't done anything since. So we got to wait on it. So that being said, that's it, right? That is it. The market has not given us what we want to see. Now, what I will tell you is, what I want to see. I'm gonna stay on just a little while today, just a little while longer today. We usually stop at about 10:30, but I'm going to go a little longer because I think that we're going to have a setup coming. Because you have a poke bar where it's not a line, but do you see the poke bar? See if you can tell me where it is.
Oh, with the 2700.
You see it, Keith?
8100.
It's the 8100. You see it's red. You got a poke bar right there. So that means it might come down. Don't know that for sure. You see how the short-term stochastic is red, right? Short-term momentum is red. So if it pushes, if it comes down, it's gonna be a good trade. And then we'll be able to capitalize. I think that's what's going to happen, but me thinking and me knowing is two different things, right? So if it pushes past the highs, all that's off, and we have to start over. And she looks like she's trying to get above the highs here. That volume is just really, really light. That volume is really, really, really light. You think so? Ronald Jones has said, hey, it's probably going to push past it. Let's see if it does.
Yeah, I agree.
Keith is signing off on Ronald Jones's prediction of the fact that it's going to go up. Let me tell y'all what I think. I don't think it's going up. And this is why we sit on the sidelines. When everybody's not in agreement, then we chill. But I don't think it's going up, though. I'm telling you that now. And the reason why is because of the reasons I spoke about earlier. Volume is very light to the upside. She hit that equilibrium point and bounced down.
Didn't quite make it to the.
Yeah, see that I'm talking about?
Plus the screen, please.
Yes, sir. I apologize. Yeah. There you go, right there. I could be wrong, but I think it's going down. And if it does turn over and go down, I'm gonna be excited. because that's when I'm being caught. Yeah. So, but ladies and gentlemen, I'll tell you a real serious thing. We don't predict, we follow. And it's good for you to have an idea what you think it's going to do. And if it doesn't do what you think you're going to do, then you just reset, right? You're like, okay, well, because we still don't know if this is going to end up down or up, because it's got 3,000 contracts to be traded before we'll know, right? So it could go either way.
Well, let me pull some notes up. Let me get in on this.
This is ridiculous.
So that candle, that's well, I just missed it. By the time I look at my notes.
Hmm.
I'm gonna let you know right now, if that candle ends red, if it ends red and breaks the low, she's gonna drop at least 40 points.
Hmm.
At least 40 points.
Hmm.
So I'm telling you that beforehand. Now, am I right? I don't know, but that's what I think. Right. But the first thing she has to do is close red. So we have 2,500 contracts to be traded right now.
What's the high? Like 83?
Don't get me to tell them to tell. Let me see. Yeah, 84. 83, 84.
So if I look at that candle that's trying to print with 2,300, that's considered a doji candle, where supply and demand is almost equal between the buyers and the sellers.
Yeah, that's kind of what that means.
And depending on and it can really turn quickly to what's called a shooting star, to the upside or the downside. But we'll see here after about 2,000 more contracts.
That 8,100 keep your tail out of trouble.
I'm erring on the side with you, Will. I think it's gonna go down to it's gonna be favorable to the downside.
We'll see. We got 1,900 contracts to see, and she's right there on it. So I mean, it ain't like somebody's got to do something tremendous in order to be right. If somebody come in and buy 500 contracts, it'll be up. If somebody come and sell 500 contracts, it'll be down. So let's just wait on it and see here. But I'm telling you, I can guarantee you, I'm putting it out there before it happens. If this bar closes red and it breaks the low of this bar, she's going to drop for 40 points. 40 points is equivalent to $800 in the NASDAQ E-mini futures. I can almost guarantee it. And all thing we'll be doing is waiting for our setup so that we can minimize the amount of risk that's involved and looking for a poke bar.
Man, there's still divergence on the 8,100. It was at one point, but I don't think it is anymore.
No, it is not.
All right.
That is interesting. So, as I thought, Marcus, that I can guarantee that ball going to end red now. It's impossible for that thing to end up anything other than red at this present moment.
I think we also going to see on the 8,100 that long-term momentum start to flicker.
Well, we'll see.
Hope not. That's why I think it's going up.
Huh?
Hope not. That's why I think it's going up. Actually, I thought it was going to push up past it, then drop down. I thought it was going to get one more push off that higher low. and then we were gonna get a move down, but seems like
So
struggling right there.
I'm gonna go ahead and teach everybody something on this thing. Everybody, right? Keith, you already know this, but you didn't think about it. So because I know you weren't thinking about it like that. And okay, that bar ended red, right? Let's look at this for what it is, not what we want it to be, right? And we are looking for the trade. So this right here is a bar at the top, and it's red, and it broke this low. Unless price gets above these highs, my bias is 100% to the downside right now. And the reason why, in addition to that, you have the market giving you a 3-bar reversal, which is one of the reversals I talk about. And this is basically
Mind
equilibrium.
highlighting that reversal, please.
Oh, absolutely. Hold on one second. Let me. Oh, no, it's not. It's not a poke bar. It's not a poke bar. So, yeah. All right. So we don't have anything to worry about on that. So the 3-bar reversal is here. Price came. This is a high, 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 low. This is a lower, low, lower, high. But then price came and broke this low. So there are sellers in here. We just don't know who has control. And because we don't know who have control, we don't do anything, right? We wait for the market to prove itself by going in a direction. Once it's affirmed, it's confirmed that it's going this way, but the sellers are going to have to reassert themselves. And if they don't, then there's no harm, no foul. We're not in the trade. But if it does, this is what I mean by predictive measures. You have a way of being able to say what you think the market is going to do, and if it does what you think it's going to do, and it happens the way you think it's going to happen, then you can take that trade with fair amount of confidence.
Well, did it give you a 3-bar reversal to go back up though? Did that red bar break that and high the other red bar?
It did, but it didn't break this high. See, had it broken the highs, I've been like, yeah, this thing gonna continue to go up right here.
Yeah, that'd be your trend, but I
But
thought the 3-bar reversal was if it broke this, that all right here.
yeah, it did. It broke the high, but it didn't break the original high from where it came from. So because it didn't break the original high where it came from, that typically was a fake. Now the thing is, it formed the red bar form red right here, but this right here is kind of scary because it could just turn around and push up. Hold on a second. I don't know why this doesn't show my indicators at the bottom. I don't know what happened. Oh, that's because I got everything hidden. So we just wait on it, right? We don't try to force it. This is where you get in trouble. This is where people get in trouble. Because there's no reason to do anything other than chill.
I'm gonna step away for a quick second.
All right, that's fine. It's gonna be a minute before we get that trade that we want. If it breaks this high, it's gonna break the highs. And if it broke it, it's gonna go break the highs now. Now I broke the high to the upside. Now we'll see if we can get but we're not gonna get a trade. Because you're gonna need a poke ball on that 8100 because there's nothing else aligned. You get what I'm saying?
Yeah.
What you see?
And everything except for the long-term momentum on the 2700 is aligned. Well, the long term, the short-term momentum on the 300 isn't, but the yes, it's kind of out of the way.
And this is what people lose it at. This is what amateurs playing, and you don't really know what you're doing. So you just sit there.
Like, push up, so I won't just hop in.
Yeah, yeah. Would you jump into a moving car?
Mm-mm.
You finna stop and almost turn this mug off while we can get in here.
Hop out of it.
Yeah, so you wait for pauses, right? You wait for pauses in the market. I got a feeling it's going to be divergence to come sliding back down. That's what I think. But it hit that equilibrium point. You remember when I said it could bounce up off of it? That's exactly what it did. It came and hit it and bounced right up off of it. Equilibrium point. That is nothing more than where a bunch of buyers and sellers agreed that that was a fair market price for the market at that particular time. That's all that is. It's nothing mystic about that at all.
That's a poke on the
Nah, yeah, and the thing is, if you was gonna do it, you should have did it here. I wasn't looking to take that trade because of where we were. This is the one you should have took if you were gonna do it. But shit. So we wait. We haven't had any many trades today, man. It's crazy. Come on now. We've had one trade today, ladies and gentlemen. It did work, but it didn't work for a whole lot. But it did work nonetheless. So we just need to wait. Be patient. Wait on what you want to see. Now if you get a poke bar here, you see what I'm saying? Now if you get the it's tough. All right, is anybody here?
Yeah.
Put the things back on. So let's see.
This bias is to the upside.
It is.
Um,
That you see how
you're gonna
that
call.
no, that thing moved too fast and it made the stop too big. You don't see that?
Mm-hmm.
It literally got you in right here. This, ladies and gentlemen, I'm going to go ahead and say this is the trade we're going to call it 675.7. But it became a 12-point stop because this thing moved and it closed above the highs. And I think it's going to go, but it happened so fast. It happened, that bar pushed like really, really, really fast there. And you see how herky-jerky it is right now? I think it's going up. But again, in my opinion, because Ronald was about to hit the button and he didn't even get a chance to get up good.
I mean, I'm ready, but that's why I was calling to see. I was ready on that one.
Jeez. Now it's back to your price. Yeah, you be sick to your stomach because you probably, I mean, you only got slipped that bad because it went down. Ooh, that was tough. It's gonna go up. But that's it.
That's that volatility you was talking about.
Yeah, it was real fast, right? Ladies and gentlemen, that trade worked at 675, but it still hasn't gone 1-to-1. So we're gonna see if it goes 1-to-1 because it needs to go to 1750 in order for it to actually be a winning trade. So let's see if it gets to that 1750 area. This is not one we took live because of the literally because the volatility was just too much. Oh, it moved too fast. Really, that's
You see 1-to-1. I'm clarifying. That means the 10-point goal that we set.
Right. It's 10 point. The stop was actually 11 and a half points. So
Okay.
it got 11 and a half points from 675, which would be 18 and a quarter.
So that 1-to-1 is based on our stop. I got
It's
you.
based on what your stop is, correct? So it'd have to get to 18 and a quarter in order for that to be a legit trade. That is not something that you want to take. I like that right there. But that's a huge, you asking that thing to make basically it's got to continue to break highs. Is that the version's gonna go away? Huh? Because you got potential divergence on
Temperature
that
divergence in the 8100.
100. Yeah.
I don't really see divergence anywhere else.
No, you don't see divergence in the Wales, but that 8100 is big enough. Let's see what this. Let's see at this point, ladies and gentlemen, if it didn't push, I'd give it the final push here, but I wouldn't be losing on this trade, right? If we're in this trade live, I'm not.
I understand what you're saying now.
Huh?
I understand what you're saying now.
Yeah, I wouldn't be taking a loss on this trade. I'd be out right now. You know, I'd have paid for commissions and been done. And that's all I would have did there. There's no trade that's literally is not working as far as moving fluidly right now. So I'm going to go ahead and end the YouTube session. I hope you guys have learned something here today. Join us every day. We called one trade live that was a winner. And we watched one trade that's basically a break-even trade. There was some technical difficulties on our part, but you know, it's minor in nature, so no big deal. But we're going to continue to trade here through the day, but we're going to call it for the YouTube live. If you guys have any questions, you know where to hit me. Support at theprofitstalker.com. All right, so we out.